Capitalization of China stock market is about to reach the threshold of 10 trillion United States dollars for the first time since the bubble burst. Chinese investors have been waiting for 5 years to return the market capitalization to 10 trillion United States dollars. This is a milestone that will mark a strong recovery momentum after the worst decline in history. The good news here is that the Chinese stock market is likely to reach this number this week, even if only a slow rise, which is encouraged by Beijing. According to data compiled by Bloomberg on July 13, the capitalization of the Chinese stock market has reached $9.3 trillion after the galloping momentum this month. This positive development has brought two major indices to their peak in 2015 and helped most of the market's reference indexes become hotter. In local currency terms, the capitalization of the Chinese stock market has reached a record 68 trillion Chinese yuan. However, the figure of 10 trillion United States dollars also marks the peak of the bubble, inflated 5 years ago. This is a painful and unquenchable memory for investors. The similarity between the present and 2015 has made policymakers concerned, whereby they have to take steps to curb market momentum. Large-cap stocks on the Shanghai Stock Exchange plummeted on Friday, after two state-owned funds said they were planning to sell shares. And while the state media still encourages the appearance of a cow, a commentary published on Monday also emphasized the importance of a stock market with a healthy momentum. Strong. Despite the warnings, the excitement of investors is still high. The CSI 300 index continued fluctuating at the beginning of July 14, sometimes increasing by 0.2%. Hao Hong from Bocom International Holdings Co., one of the few who correctly predicted the beginning and peak of the latest boom of the Chinese stock market, said the market is hard to reach $10 trillion this time. Hong, chief of Bocom's research department, wrote in a note, "The upward trend is still there. Encouragement from Chinese officials is still the driving force for the market. This helps improve the market sentiment and strengthening the determination of domestic investors and activities of pouring capital into new and creative industries." Meanwhile, analysts of China International Capital Corp. again predict that the market will double in value after at least 5 years. In June 2015, the capitalization of the Chinese stock market for the first time surpassed the US $10 trillion mark, when investors poured money into stocks using borrowed capital. The collapse in 3 months caused $5.2 trillion of market capitalization to evaporate when investors rushed to make margin trading. At this time, Chinese officials seem to want to promote a stable bull market. Market capitalization reached 1.33 trillion Chinese yuan on Monday, and the leverage ratio was only half compared to the peak in 2015, while valuations are still relatively low compared to other markets around the world. Bridge. In addition, the rise of the Chinese stock market coincided with the time when China launched moves to promote market reform, such as the plan to include listed shares in the technology index. Star into the Shanghai Composite Index basket. However, the hottest stocks in the Chinese market are experiencing fluctuations in the afternoon session of July 14, showing that the increase of US $1.5 trillion is unlikely to be achieved in a short time. The Chi Next index fell 3.3% in this session, leading the decline of major reference indexes. Dai Ming, a fund manager at Hengsheng Asset Management Co., said, "The downtrend of major index funds is a sign that China wants the market to cool down a bit. Want to see a market slowly increasing, in line with the pace of economic recovery." Bloomberg, China's major index hit a 5-year peak. The risk of a bubble in 2015 will repeat. Starting the first trading session of the week, the Chinese stock market continued to rise sharply thanks to the positive information from national media. The CSI 300 index soared to 4.2% this morning, recording the strongest increase since February 2019. Meanwhile, last week, this index also gained 7%. Sales on this index were 3 times higher than the daily average. Brokers were the leading factor in the rise after China International Capital Corp. Raising target prices for this industry, predicting that the stock market will double in value in the next 5 to 10 years. According to a law article published in Securities Times today, promoting the cow market after the pandemic is becoming more important to the economy than ever before. The content emphasizes the rapid increase of the market in the recovery momentum and the large amount of liquidity around the globe, while also saying the conflict between the world's powers is an important factor affecting the rise. Chief of Financial Markets. For a long time, the Chinese state media has issued messages aiming to guide investors in important times in the market, whether to promote the rise or cool down the speculation trend that has been too hot. While the domestic stock market may signal the resilience of China after the pandemic, as well as create favorable conditions for companies to raise capital, this risk also exaggerates a result. Bubble like 5 years ago. Wang Zhou, fund manager at Shanghai Juju Investment Management Co. The state is very cautious about being able to inflate a balloon like 2015, because they realize the harm to investor confidence after the bubble burst is greater than promoting the market, he said. We are still holding on to the stocks we had previously, mostly underestimated, because we profit more from alpha than beta. This year, the CSI 300 has increased by 12%, recording the largest increase among the global reference indexes and trading at the highest level in 5 years. Signs that investor sentiment is on the rise, with daily sales in the mainland exceeding 1 trillion Chinese yuan (US $141 billion) on Thursday and Friday. Monday trading also witnesses biased similar trends. This will be the longest gaining momentum since March. Investors' risk-taking sentiment also creates momentum for Chinese government bonds, with 10-year bond yields rising to 7 basis points. Version today. According to Baidu Index, the number of comments and retweets on the mainland with content related to the bull market over the weekend is about 10 times higher than the 90-day average. In another factor also showing improved market sentiment, Semiconductor Manufacturing International Corp. Preparing to hold the largest share issue in a decade in the mainland, when the leading chip manufacturer in the country raised capital in the context of U.S. tightening regulations on technology purchases. According to the announcement of the Shanghai Stock Exchange, SMIC can sell up to 53.2 billion Chinese yuan of stock.